Welcome to another episode of Time, Talent, Treasure Radio from Stewards Planning Group. Stewards Planning Group is a company that specializes in helping you build purposeful retirement plans, custom plans that not only help clients steward their treasure, but also their time and talent as well. They believe if you're taken care of financially, you can go even further to make the family, community, and kingdom impact you truly desire to make, which is the ultimate purpose of wealth. If you'd like to set up a no-cost, no-obligation meeting with one of their financial advisors, please give them a call at 222-4236. You can request a meeting at stewardsplanning.com, or you can simply stop by their office on 19th Avenue Southwest in Wilmer.
Hey everybody, and welcome to another episode of Time, Talent, Treasure Radio. I am your host, Ben Taatjes, joined in the studio by Jonathan Schaffner again today. Jonathan, how are you?
I'm doing great. Thanks for having me.
Yeah. Hey, so the last couple shows, we've talked a little bit about income taxes, and it's top of mind right now as people are either just getting their income taxes done and maybe they're looking over their return, trying to learn as much as they can about that. You and I have this in common. We used to do income taxes. I know you came over working with a lot of CPA firms from our home office, and I actually worked with a local CPA firm as I was building the financial planning business. And a question that came up all the time was, should I itemize or should I just take the standard deduction? And I don't want to get into all the details of that, but I do want to talk about a specific change when it comes to charitable giving that will impact people for 2026. But before even going there, I want people to understand big picture, what's the difference. So the IRS allows you to deduct away from your income a certain amount, and we're going to call that as a standard deduction. This is not the actual exact number, but let's just use $30,000. It's about that number. Last year was slightly less. This year could be slightly more. But about $30,000 is the standard deduction. And what people have to do is decide, am I going to take that standard deduction, or I'm going to track all of my expenses that go into me itemizing and listing them, itemizing out all of my expenses that qualify. So what people have to do is decide, working with their CPA, am I going to take that standard deduction, which again is around $30,000 and higher now if you're over age 65. Am I going to take that standard deduction, or am I going to itemize, which includes the following: mortgage interest, state and local taxes, so that's capped at $10,000, charitable giving, and medical. But the problem is there's rules with all of that. So with the medical expenses, it has to be over 7.5% of your AGI. So many people find that they just don't have enough medical to qualify. State and local taxes capped at $10,000, and a lot of people that we work with don't have mortgages anymore. So most of our clients end up taking the standard deduction because the total of all those items don't equal more than the standard deduction that they could be taking. We were talking before the show, Jonathan, and we've been talking with a lot of our clients. This might seem like a small item, but a change for 2026 is people who are giving to charity actually can get a tax benefit without even itemizing their tax deductions. Tell our listeners about that.
Yeah, for 2026, the above-the-line deduction has come into play, and this is really huge for the people using the standard deduction. So if you take the standard deduction, you can now deduct up to $1,000 filing single or up to $2,000 married filing jointly.
Perfect. And that's when you say above the line, that means before the decision of itemizing or not. So if I'm not itemizing, I'm just doing a standard deduction, this is available for me. And it kind of, that's not why we give money away, it's just for the tax break. But for somebody that's giving a couple $1,000s away in the past, there's been, maybe a benefit on the state of Minnesota tax return, but the federal return, if you were just you weren't going to itemize, you really got no benefit. So now you're able to at least take that first $2,000 of married filing joint and actually deduct it from your taxes. What else should people know about that, specifically when they're using that deduction?
Absolutely. So the biggest thing is it can't be any QCDs, qualified charitable distributions, or donor advised funds. But the big takeaways are give cash, make sure it's a qualified 501c3, and keep your records. and you could only claim up to $1,000 or $2,000 against your AGI.
Perfect. So, yeah, what we're talking about there is a lot of times people say is, can I give it to my kids? Unfortunately, they don't count as a charity. It may feel like it at times, but they don't count. So what you want to do, again, make sure that you're keeping good records. The monies are actually going to a 501c3. And what I've found is a lot of our clients are utilizing qualified charitable distributions. So they're sending money from their IRA already. So therefore, they don't get and don't typically itemize. They can actually use this strategy in addition to that and take the full $2,000 and then also send money from their IRA. Works really well if you're just want to do a small gift to somebody or some organization. Maybe you're part of a fundraiser. We've got a ton of awesome fundraisers in our community, and if you're just going to give that directly and you don't want to go through the work of taking it from your IRA directly and doing a QCD, you can simply write the check and still get a tax break for it. So love that change, Jonathan. Love that. Hopefully our listeners can benefit from that as we're talking taxes right now, because we're getting close to the tax filing deadline. So again, taxes, one way that we can help you plan and help you steward your resources here at Stewards Planning Group. So until next week, from all of us at Stewards Planning Group, steward well.
Ben Taatjes is a financial advisor at Stewards Planning Group. Securities offered through Cetera Wealth Services, LLC. Member FINRA SIPC. Advisory services offered through Cetera Investment Advisors, LLC. A registered investment advisor. Cetera is under separate ownership from any other named entity. 1104 19th Avenue Southwest, Wilmer, Minnesota 56201. The views depicted in this material are for information purposes only and are not necessarily those of Cetera Wealth Services, LLC. They should not be considered specific advice or recommendations for any individual. Neither Cetera Wealth Services, LLC nor any of its representatives may give legal or tax advice.